Hi, everybody. Thanks for joining in again for Fit Friday. Today, we're going to talk to our return guest, Matt Labicetta with Gills Mortgage, and he's going to talk to us today about being a first-time home buyer. So make sure you tune in for the whole episode so that you can get tips on how you can buy your first home. Hey, Matt, welcome to the show.
Hey, Sonia, great to see you again.
Yeah, you too. Hey, thanks for doing this for me again. I really do appreciate it. And I know that the information that you're going to provide everybody is going to be really helpful. So let's start with kind of where we left off a little bit the last time. We kind of talked about refinancing. We did a little bit about pre-qualifying. Explain to my viewers and listeners, what is pre-qualifying?
Yeah, that's probably the most important question, or really the main component in buying your house. What a pre-qualification is basically. It's going to let you know exactly how much you qualify for, so that way you're not going out there and shopping or window shopping, right? And looking at something that you may not afford, or something that you can afford but possibly you don't want to absorb that monthly mortgage payment, right? So that's why it's important to get pre-qualified. And basically, that's just us assessing your income, your credit, your assets, just making sure you meet all the minimum requirements and things like that in order to get pre-qualified.
So is pre-qualification painful at all? I mean, does it like hurt you?
Man, that's the rumor. I hear that quite often. The good thing is no one's ever left my office in tears or anything like that. I mean, really, I take a lot of pride in making it seamless and easy on that as on the borrowers as possible. So I think we put together a pretty streamlined process that makes it simple.
Well, that's good to know, because I have heard people say that it does hurt a little bit. Maybe they don't show it to you, but when they call me, they're in a little bit of pain.
Right.
Can you explain to me what a FICO score is? I mean, I know people have probably heard of it, but maybe they don't know exactly what it is.
So FICO score is essentially your credit score, or what mortgage lenders look at when we're qualifying for a mortgage. So there's 3 scores we pull from Equifax, Experian, TransUnion, and then we're going to use that middle score out of the 3 to qualify you for a home loan.
Is there a magic number, a magic FICO number?
Minimum requirements right now, because of COVID and everything like that, are 600. So that's going to kind of, that's going to be your starting point there for getting qualified for a home loan.
With the FICO score of 600, does that affect the interest rate at all?
Yeah, that's a good question. It is going to affect your interest rate. Obviously, the higher the interest rate, the higher your credit score is, the better interest rate you're going to get, because the bank looks at it and assesses it, less of a risk. So that's why people that have higher credit scores get better interest rates.
Makes a lot of sense. What's the different type of mortgage loans that are out there?
So there's FHA, there's conventional, my favorite, which is VA, there's USDA. So those are really your 4 most popular types of loans that are out there.
Which one is the better of the loans? Is there like a difference like that, or no? Not really.
Yeah, so with obviously there's minimum down payment requirements for each option, right? So with USDA or VA, there's no down payment required. With FHA, the minimum down payment is 3.5%, and then with conventional, it's anywhere from 3 to 5%, just depending on what the situation looks like. Now, the great thing with on every loan or FHA, conventional, you're going to have mortgage insurance, right? But with conventional, that mortgage insurance, you can request for that mortgage insurance to come off after you gain 20% equity in the property. And now, depending on what your purchase price is and your credit score and so on and so forth, I mean, mortgage insurance can range anywhere from $100 to $250 a month. So going a conventional loan, eventually that drops off, like I said, after you have 20% equity in the property. Now with an FHA loan, that mortgage insurance is going to stay on your loan for the life of the loan. So it never comes off.
Wow. Well, that's good to know. So an extra $150, maybe $200 a month for the life of the loan. Wow. So we want to make sure we do some saving before we come for that loan, right? So is it better, Matt, to get a 15-year or a 30-year, or are they equal? I mean, give me the benefits, I guess.
Yeah, so I'm a major fan of a 15-year loan, and the simple reason for that is you're going to pay less interest. So obviously you're keeping more money in your pocket over the term of your loan. Obviously, not everyone can afford a 15-year mortgage, just because obviously it's going to be significantly higher than a 30-year because you're financing this large amount of money over half the time. So anytime I get someone in my office and we have a conversation, and if they can afford a 15-year mortgage, like I said, I'm always going to support that if it fits within their budget because they're going to save so much money. Now, if you have to do a 30-year, I have a 30-year mortgage myself. So if you have a 30-year mortgage, there's nothing wrong with that. But like I said, if you can fit it with a 15-year mortgage inside your budget, that's a great way to go.
That's good to know. When I'm going for the loan, whether it's a 15 or a 30-year, are there points? And if there are, can you kind of tell me what that means?
Yes. So with 15-year and 30-year, there's always points are basically, they're called discount points. And what those are is a certain percentage of the loan amount that you pay for to buy your interest rate lower. So say your loan amount is $200,000, okay, and your par interest rate, which means your interest rate that costs no extra money to you to have that interest rate, is 3%, okay? Now let's say, hey, I want to get a 2.5%. So I say, hey, we can do that for you, but it's going to cost you 1 point. 1 point is equivalent to 1% of the loan amount. So it would cost you an extra $2,000 to buy down your interest rate from 3% to 2.5%.
And I have to pay that loan.
To pay that, exactly. Mm-hmm.
All right. That's also good to know.
Yes.
How much money typically does a first-time home buyer need for closing costs?
Right. It just depends. I mean, most of the time, first-time home buyers are between 180 and 220. So I mean, typically for closing costs of that purchase price, you're looking around $5,500 to $5,800 max for your closing costs.
Got it. But is there anything else? I mean, because I guess I want people to understand that when they are coming to purchase, like you said, that 180 to 220 range, how much money they should potentially have in savings. Like, are there any down payments that they need to be saving for?
Right. So with first-time home buyers, like I mentioned earlier, with the different types of loan types, is that minimum down payment requirement on an FHA loan is 3.5%. So that would be 3.5% of your purchase price, in addition to that $5,500 that you'll need for closing costs. So those two amounts combined are going to be your total cash to closing amount. Or on a conventional loan, we can always look at putting down 3% if the client meets the minimum FICO score requirements for that.
So, of course, you've worked with me and my clients and my first-time home buyers, and you've helped them get great deals. Kind of explain some of the packages that are out there in Arizona for a first-time home buyer.
Right. So Arizona, we have first-time home buyer programs that will cover your full down payment for you. Okay. Now, the minimum that you can borrow is about 3%, right? And then you can go all the way up to 5%. But for each percent that you borrow, or not that you borrow, but that you're granted, I guess, for each percentage you go higher, your interest rate raises also. So that's something to think about. If you need your full down payment covered, then obviously we want to use the minimum, the minimum amount. If you need a little bit of extra closing costs to help cover the closing costs plus the down payment to help us win the deal, we can do that. But it's always best to keep in mind that obviously the more we borrow, or the higher your monthly payment is going to be because the interest rate is higher.
Thanks for that explanation. You know what? You helped me with something one time, and being a new agent at the time, it was kind of hard for me to wrap my head around. But explain for everyone that's listening, I don't have any money down. I don't have the 3%. All I have is earnest money. And it's a pretty good market right now for a buyer. Explain to me what that means when we ask the seller to help us. How does that look for the loan?
Right. So say if we have down payment assistance, right? So we're using the grant or the bond amount from Arizona to cover your down payment. Then what Sandra, you can do is you can ask the seller to cover the closing costs. So that closing cost amount that I mentioned, which is normally $5,500 or $5,800, the seller can cover that. Okay, so essentially you could possibly get into the house for $0. In our market right now, it's very competitive to do that. But 6 months ago, that was pretty easy to do. So yes, closing costs are always the buyer's responsibility. But if you have a great real estate agent like Sandra, then they can negotiate the seller to pay those closing costs, and then we can use the down payment assistance to cover your down payment. Again, like I said, essentially walking into the house for basically $0 out of your pocket.
That's what I was talking about. Yeah, you're right. It was a few months ago, but it was a great program, and who knows, it could come back someday. But I really wanted you to touch on that for me because I thought that was an excellent way to get one of our clients into her first home. So I definitely want people to know about that. Can you give me just a couple tips maybe to tell someone what they need to do to get ready now? Because the market is as good as it can possibly get. The interest rates are relatively low. We don't know how long it's going to be this way. But can you maybe give me some tips for the viewers to help them get ready to buy now?
Yeah, I can definitely do that. One, I would say, rule number one is have some money in your account. Just because, like I said, if you have something that you can put towards the purchase, even if it's $1,000, that's better than nothing. A lot of the times too, we need to show if you have a lower credit score, but if you have, a couple months worth of what your new mortgage payment will be already saved in your account, that's going to help strengthen your case in getting approved for a loan. So always good to have some savings in your bank account. The second thing is monitor your credit report, right? Or monitor your credit score. So if you have high balances on your credit cards, pay those down. Make sure you're paying all of your credit cards and car payments, things like that on time. And that's basically it. Everyone is different, so you have to coach everyone differently. But like I said, have some money saved. Monitor your credit report, pay things on time, and that's basically a good starting point for sure.
Nice. All right, this is going to be a little tricky for you, and I don't mean to embarrass you, but give me a typical meeting with Matt in the office, and what does he say to the client, and how does he make them feel comfortable about this really big experience they're about to go through?
Yeah, with me, it's basically I like to know who you are as a person before we start getting into the nitty-gritty of the financials. So with me, I like to know exactly who you are, where you come from, what your goals are with buying a home, and things like that. And then once we discuss all of that, then I'll kind of get into okay, how much do you want to purchase, and then we'll go over your credit report together, and then we'll talk about, you know, what's a comfortable monthly payment for you. Because my biggest thing is, I always tell clients is, you know, I don't want you to call me 12 months from now and say, hey, Matt, why did you let me buy this house? I can't go on the vacation I wanted to go on. So that's, you know, those are the things that I kind of like to nail down with clients. Because like I said, buying a house is a major investment, but let's make sure that you don't have to break your back to pay your monthly payment every month, and that you can live life the way you want to live life. So that's basically with me. It's I try to make it as fun as I can, and tell jokes, and just make it a great experience all the way through.
Nice, nice. And now with everything, you know, kind of being on a limited in-person basis, you have an online app that I send to my clients, and I'll actually post it in this video at the end, so that if people want to link directly to you, they can, and you can get them started. So
Yeah.
let people know too, Matt, you're not just Tucson. Kind of give them an idea of what areas you work around.
Yeah, so I service all of Arizona, so not just all of Arizona, and I have colleagues that I trust very, very much in my office that also service Texas and Colorado. So we can help out with if you live in those 3 states, we'll take care of you. And then as far as the online application goes, I mean, that's a great way to get started. Is if you supply them with the application, they fill it out, and then I give them a call, and we go over that application in depth, and we also go through the credit report, just to make sure that they're aware of what their credit scores are, and to ensure that everything reporting on the credit report is accurate.
Nice, sweet. Well, hey, I appreciate you once again taking time out of your schedule to talk with me and share knowledge with everyone that's kind of tuning in or viewing. And like I said, I'll put your information in the notes, so when people log in, they'll see where to go, and they can fill out an app for you. And let me know if you get anybody from watching this video.
I definitely will. I appreciate it.
All right, Matt. Thanks for your time today.
Yes, ma'am. Thank you.
All right. Have a great one.